Welcome to Premium Cashflow Real Estate Investing Podcast with Sakar Cowley. During this program, you will hear guest experts sharing their experiences, best practices, and market insights. We discuss investing in multifamily apartment complexes and how a busy professional can passively invest hassle-free in various opportunities. Your host, Sakar Cowley, owns millions of dollars of assets and has done thousands of value-add projects over 20 years now. So listen in for insights. Here's your host, Sakar Cowley.
Welcome to another edition of Premium Cashflow Podcast. Today, I have the pleasure of speaking with Antoine Martel with MartelTurnkey Properties. Thank you for taking time, Antoine. I appreciate it.
Absolutely. Thanks for having me.
Awesome. So Antoine is with MartelTurnkey. Their group does a lot of turnkey properties and they do a lot of multifamily as well. And he is a veteran investor who has seen a lot of deals and done a lot of repositioning and stuff. And he is also very well versed with a lot of passive investors raising equity and capital for acquiring the deals and things like that. So with that background, Antoine, give us some perspective on, sort of what your background was and how you sort of came into real estate.
Yeah. So, as you can probably tell, if you're watching the video, I'm pretty young. So I started investing when I was 19 years old. My dad took me and my brother took me and my dad to a real estate investing seminar. We learned about flipping houses, raising money, wholesaling, everything, just in a short little weekend. We kind of learned the macro level of kind of real estate investing and what it is and what it's supposed to look like behind the scenes. And so with that, we were all like super pumped, and we lived in San Francisco at the time. So everything was super expensive, and we started making offers and, making offers on $1 million tear down properties and stuff like that. And just after 6 months of doing that, we just kept getting bid out. Everybody would just, make way higher offers than us to where the deal didn't make any possible sense in our opinion. And so we realized that with, the amount of capital we had and stuff like that, just like this strategy wasn't going to work. We only had like 40, 50 grand saved up. It was just my dad's money. And so my dad went back to work. He was, working full time in the Bay Area. And then my brother went and became a realtor in the Bay Area. So went down that route. And then I moved to Los Angeles to finish up university. And so then while I was here, I was like, man, I really want to figure out this real estate thing. I don't want to go and graduate and get a job and work for somebody else. I want to figure out my own business. And so I started just networking and meeting as many people as I possibly could in LA who were investing in real estate. So, a couple of them were doing stuff locally, but a lot of them were doing stuff out of state, whether it was buying turnkeys or flipping houses or investing in syndications or doing apartment buildings. And so I just kept on picking these people's brains about how they chose the market, found the team, found the property, and how they did what they did. And with that, coupled with the networking and also like listening to Bigger Pockets podcasts all day long, I finally realized that, with our resources, which was, 40 grand, the only place to really invest that would make sense for us was to do an out-of-state BRRRR project. So my last semester at university, I chose my market, which was Memphis, Tennessee. I built a team, which was like a contractor, property manager, realtor. And then I found my first property and put the property under contract for 35 grand, renovated it for 5 grand. So all in for 40,000 bucks, then rented it out or rehabbed it, rented it out, and then did a refinance and pulled all the money out all before I graduated. And then I went to, my dad after, and I was like, hey, I can keep doing this after I graduate. I don't want to go and get a job. Let me just keep doing this and grow a family portfolio. And so that's what I ended up doing. And I was like, just give me 6 months, just pay for my expenses. Let me figure this thing out. Give me 6 months. If not, then I'll go get a job or move back home or whatever the case may be.
That's awesome.
Yeah. So then graduated in May. By December, we had like a portfolio of like 8 to 10 single family homes in Memphis. So
I see.
It had worked.
Way to take action and, massive action and doing lots of things. So that's congratulations.
Yeah, thank you.
So give us a perspective of Antoine as to what your portfolio looks like today.
Yeah. So today we have the turnkey business. That business buys, rehabs, rents, and sells around 10 houses a month. So last year we did 85 homes. This year we'll do over 120. And then, so that's just with the turnkey, flipping essentially. And so we're doing 10 houses a month there. Then with the apartment buildings, we have last year was our first year buying apartment buildings, and we bought close to 100 units of apartment buildings in Memphis, Tennessee.
I see. Oh, awesome. There's a lot of goodness that we can unpack slowly and sort of, go through step by step. Now, Antoine, you said you acquired a lot of single family houses in, I think you shared with me earlier that it was in Cleveland, Ohio, right? And you have some footprint in Memphis, Tennessee as well. Give us a sense of, why those two cities, what sort of went through your mind. You shared earlier that you spoke with a lot of other investors as well, and spoke with them. Give us a sense of what was going through your mind, and why you chose these two cities.
Yeah, so the reason why we chose the two cities was, first of all, listening to a lot of podcasts and listening to what other people were looking for. So everybody's looking for like population growth, job growth, major employers, the diversity of the workforce. What companies are there? Like the big companies that are there, do I think they're going to be around? Is it an Amazon, or is it, is BlackBerry the largest employer, right? So doing that kind of research, also like looking at, for example, the landlord-tenant law. So is it a landlord-friendly state or not? And then also just the price points and the population. So there was a couple of things. Like I wanted a place that had enough population, so like over 250,000 people. I wanted it to be landlord friendly. I wanted the price points of the homes to be less than 100, or close to $100,000 on a median. And so, looking at all that different kind of data is how I literally made a Excel spreadsheet of just like the 250 MSAs or whatever in the country, and ran all that data, and then kind of from that list, I Memphis, Cleveland, Birmingham, and St. Louis were on the top of the list. And so those are the people then in the markets that I just started cold calling and networking with people on the ground in those 4 markets.
I see. Now, speaking of networking, as you pointed out, you live in LA, as you shared, right?
Yeah.
And how did you get started initially? Like, you had to visit a lot, look at a lot of properties. Give us some sense of like those first 30 days, 60 days, how did that come about?
Yeah. So let's say I had the Excel spreadsheet done, and I was kind of like trying to build that team on the ground. And so the way I went about it was just cold calling. So cold call every single property manager, every single realtor, every new listing. I would cold call people, the listing agents. And so that's kind of how I built the team, was literally just cold calling. I didn't even go out to the market because I couldn't, because I was still in school. So I had to be here to show up for class.
Sure.
And so it was all done virtually. And even the first like 3 or 4 houses that we bought were all done virtually. I never actually went to Memphis, Tennessee, or touched the ground or did anything like that. It was all just virtually done, and just, having checks and balances, right? So I would always like hire an inspector to go out to make sure that, what he said was true, and to validate information that I was getting, just to make sure. And so that's kind of how I protected myself, because a lot of people are, really scared to buy stuff sight unseen. And I guess I kind of just realized too, like, okay, the contractor is telling me this, the inspector's telling me this, that matches up. Like, okay, do I really need to go out there? Like I've never even, I've lifted a hammer a couple times in my life, but I'm not going to be able to know like, oh, this needs to be replaced and this needs to be like, no, I'm going to let the professionals tell me. I'm going to take all the information I can buy, which would be like a property inspector, and then I'll use that information to make the right decision.
Absolutely. Antoine, you shared that, you initially purchased at 35,000, you invested 5,000 and stuff, right? So when you acquired, you had like good agent sort of relationships, or was that through like some wholesalers and things like that initially?
So that was just a listing on the MLS, actually, that I was cold calling. I mean, I called like 200 realtors and all the property management companies. So I had already talked to so many people. And then whenever a new listing would come up, like in an area that I liked, quote unquote, then I would cold call them, and I'd be like, hey, my name's Antoine. I'm a out-of-state investor. I want to buy this property on 123 Main Street. I want to buy it and rehab it and then rent it out. And, is that possible with this? What do you think it'll be worth after? Oh, I think it's worth $65K. How much work does it need? Oh, I already have a bid from a contractor. And so like he was just on that phone, like a 5-10 minute phone call, I already knew that he was light years ahead and he had the right connections. Oh, do you have somebody who can manage the property? Yeah, I have a property management company that I use and my clients I've used in the past. And so like just with that one phone call, I was like, oh my God, this is after 250 phone calls with other realtors. This guy was light years ahead of these people and was like, somebody I could actually build a long-term relationship with.
I see. Awesome. Now, give us a sense, Antoine, as to what does your team look like right now on the ground?
Yeah, so we have in Cleveland, Ohio, we have a project manager, property management company, and then we have about like 9 crews running at any given time because we have like 30 to 40 homes, projects going on right now. Then in Memphis, Tennessee, very similar. We have a property management company which has a lot of people within there.
Sure.
And then we have 2 contractors running. One runs all the apartments, all the unit renovations, and then one does our single family homes that we're just getting into again. And then of course you have, your escrow companies, your insurance companies, your different lenders for every market. But yeah, it all started really with just the property manager and then using them as a hub to like different people and meeting different people for your team.
Sure. And how many years you've been doing this, you said, Antoine?
So I bought my first property in 2017. So started learning about real estate in 2015, but now 2017 was when we bought the first one.
I see. Now, acquiring these many properties and, sort of going through the renovation and stuff is very capital intensive, Antoine. Give us a sense of like, how does your sort of, the money side or the capital side of things work? Like, how do you sort of bring in investors and what sort of relationships you establish with them during the deals?
Yeah, so a couple of different ways we do it. So with the single family homes, we raise a lot of private money. So people will lend us money, we'll pay them 12% interest a year, and we'll use their money to buy a house, rehab it, rent it out, and sell it. So that's how we fund a lot of it's almost like hard money, but without the points. And I get to, I take it from friends or family members instead of paying, some big, huge company that's their business. I have somebody who has a 401k or whatever, and I pay them the 12% annualized return. So that's how we fund a lot of the turnkey side. The multifamily is funded with the first couple of projects. We did it on our own because it was like a new venture kind of thing. So I didn't want to take anybody's money for something brand new. So, now with the multifamilies, we do a lot of joint ventures. So like we'll still own like 60 or 70% of the deal, but we'll raise money to help from other people to help fund the gap. So for example, if a project needs $1 million and I have $600,000, okay, I'll put my $600,000 in, but I'll go raise the other 400. There's no point of passing on a deal when I have, when we just need a couple $100,000 extra. And so that's how we've been funding the multifamily projects as well.
I see. Now, on the single family side, although you have a turnkey business, you said, right? But do you typically keep any buy and hold properties for yourself, or you guys are strictly selling them as turnkey properties?
Yeah, so at the beginning we were like, it would be like sell 3, keep 1, sell 4, keep 1, sell 5. And then it just kept scaling up like that. But once we realized that due to the amount of volume we were selling, we had enough capital to actually buy multifamily, then we just stopped keeping and holding the single family home space. Because I think like the only thing stopping us from really going and like starting in apartment buildings was just lack of capital.
Sure.
It takes so much more like even like an 11 unit building we bought in Memphis, like, it took $500,000 of cash to be able to buy it and renovate the entire apartment complex. Right. So
end to end.
Yeah. So like so then once we realized that we had the ability to go and buy these multifamily projects because we had the capital, then that's when we stopped holding on to the single family home side.
I see. Now, I know there's a lot of appetite for passive investors to invest in, let's say, the apartment projects and come on as limited partners, right? There's also an equal appetite, to buy the turnkey properties as well from a lot of, passive investors. Give us a sense of, what sort of is the investor appetite on the turnkey side? Like, what are you seeing? Where are your investors coming from? Is it just word of mouth, or are you doing any marketing and things like that?
Yeah. So finding the turnkey investors was all word of mouth to begin with. It was like, and still today, like 80% of the clients we have are either repeat business or referrals. The new clients, like somebody who comes from Google or marketing, is probably that other 20%. But then most of the time they buy, and they buy multiple, or they buy and then they refer their friends and family. And so it's been great. It's been great word of mouth, and we've been able to slowly increase our supply because the demand has been there. We also, I mean, we still do a ton of marketing, obviously, doing podcasts like this, blog posts, posting on every single social media platform. I've built a pretty good Instagram following by just posting there every single day, running ads on Instagram and Facebook, and, just helping people, get started, whether that's getting started with buying a turnkey or getting started with, wholesaling, or just giving people advice and giving people free advice has really helped just with the word of mouth. Because, if I give 10 people advice about ways that they can go and burr something, I don't make any money from that, but those people then have a friend that doesn't want to do that and they want to buy turnkey, but they tell them about that phone call. That's, helped me get a lot of business just because I'm actually taking the time to help people out, which a lot of people don't do for free.
Right. And now, obviously these are out-of-state investors who are buying these properties, right? What is their sort of property management strategy? So does your group offer like a package service with property management? How do you sort of tackle that aspect of it?
Yeah, great question. So all of our properties come fully tenanted, and we help our clients get property management, insurance, and financing. So every person they're going to need, if they want an inspector, we have a list that they can use as well. So every person they're going to need, we already connect them with. And so normally they'll sign the contract with us to buy a property. That property closes in 45 days, for example. As soon as they sign it, we make all those introductions. So, hey, here's the title company, here's the insurance guy, here's the property manager. Go meet them, vet them yourselves. Let us know if you have any issues. We've never had any issues. And then here's the lender, and go start getting your financing. And so then it's a 45-day process.
I see. So you are referring there, Antoine, that sometimes you have projects that you probably have just acquired, but you are marketing them as being, let's say if you bought something at 40,000 and you're marketing it at 80,000, that would be the sort of the fixed price or the turnkey price with tenant placed in that. Is that kind of what you're sharing there?
Yeah, we'll normally buy houses for like 20, 30, 40 grand. We'll buy them vacant normally. We'll renovate them, spend 20, 30, 40 grand on the renovation, and then we'll sell them for 70, 80, 90, 100,000 bucks. And so we'll sell them for, like, let's say somebody puts something under we always sell our homes for their appraised value, right? So somebody comes and puts something under contract for 90 grand. They go through the financing, call the appraiser goes out. Let's say it appraises for like 85,000 bucks. We'll just drop the price to from 90 to 85,000 and call it a day and close the deal.
I see.
So we always want our clients to feel like, they're paying fair market value. I never make them come up with extra capital at the closing table or anything like that. It's, I want them to feel like they're getting a fair deal as well.
I see. And then, you have your own appraisers and sort of lenders and things like that. You shared, Antoine, initially?
Lenders, yes. Appraisers, no. So appraisers are always chosen by the lender. And we don't really have any say in who they choose, because they have to follow Fannie Mae guidelines, which means they have to have a pool of different appraisers. Sure.
It's all hands off now. You're absolutely right there.
Yeah.
And Antoine, like when they're doing the appraisal, they basically, I assume that they're doing the as-is appraisal sort of on day one, and then perhaps as renovated appraisal, like maybe in 30 days or something. So you're getting like two figures. Does that sound about right?
No. So what we'll do, let's say they put something under contract. So like our client comes and puts something under contract. We'll finish the renovation, and then we'll tell the lender to send the appraiser. The reason we don't do the two ways like that is because it just costs more money. So normally it's like they have to what's called an extra trip fee or something like that. So it's a couple $100 every time you want that person to go out. So we normally just wait till renovations are 100% complete and before the tenant moves in. And so we normally have like a 1 to 2 week window there where we get the appraiser out there to go and do an appraisal.
I see. And how are you placing the tenants? You have the leasing agent relationships already, or you have a good sort of supply of tenants all the time?
Yeah, it's crazy how quickly those properties rent out. They normally rent out in like 10 days, I think is average, where we get a tenant to sign a lease, and then they move in, a week or two after that. So very quick for the tenants to move in to get tenants, and it's the property management company handles all of it for us. So they have many different leasing agents. They blast the properties everywhere: Zillow, Hotpads, et cetera, apartments.com. And so all the properties are blasted everywhere online. And then they're really good. I mean, we also like price our properties accordingly, right? So, if market rent is $1,000, we may do 950, 970 just to get a tenant in there quickly because, for us, speed is more important. And also, if you list it at 950, we get 40 applicants instead of at 1,000, you get 4 applicants. So now I have a bigger pool of people that I can choose from, and I can choose the strongest candidate.
Sure. And once the tenant moves in and your property closes and stuff, right? You are essentially, or your company is essentially done with the transaction, and then it's up to the external investor and the property management, and then at that point the external investor is taking on from there. Is that
Yep.
how it works?
Yeah, exactly. Yeah. So as soon as they buy the property from us, we're kind of hands off because we've built those relationships,
Sure.
introduce them to different people. So then moving forward, they're going to have that relationship with the property manager without us, which is great and which is fine.
Sure.
And then, if there is any issues, normally they come back to us and, hey, there's, which has happened like 2 or 3 times. Hey, they told me this, and this, you told me this, and this kind of thing.
I see.
And so I'm always here and available. A lot of people say, oh, as soon as you sell it, you're going to disappear. No, I want you to come back and buy more. So I'm always going to be here and help you with, getting through the process. And
Sure. Now give us a sense of, sort of what is the age of properties, Antoine, and what sort of renovations you're doing, and, just the general cost of, things.
Yeah. So normally our properties in Cleveland are like 1960s build. So a little bit older of homes. So we've gone all the way up to like 1910s, which are super old properties. But anything before 1900s, we don't really touch. So that's kind of the age of the homes. Renovations really depends. Our goal is always to make things, clean, safe, and livable. So we've done everything from like, $60,000 jobs to $10,000 jobs. So everything really in between there, stuff that needs, a full gut, and then all the way up to, stuff that maybe has a tenant in it. And we just got it at a really good price because, the seller was distressed and really needed to get out or needed their money and needed the cash in a couple of days. So that's kind of what we do. We make sure that all the biggest thing for me is just all the major systems and major systems. So making sure all of those are good and in working order and working and not leaking, and the roof is not in leaking or anything like that. So that's the biggest thing for me. If we don't go out there and replace all those items, then we normally get a home warranty for our clients as well. So yeah, that's, if you go like even just on our website and look at all the properties that we've sold, we have a very similar renovation style. We use the same. It just helps with scaling because, hey, use this flooring and this paint, and we can just buy the same thing. We don't need to think about what color works. Just you have one template and to keep doing it.
Absolutely. Thank you for sharing that detail. And Antoine, like, how many contractors you have in the group, or what sort of scale you are at right now?
Yes, so we have 9 contractors that are full with us, and then we have 9 contractor crews that are full with us, so 9 GCs that are full with us, and then we have 2 more that we're adding on. So we'll have like 11, because we normally we're always testing new contractors, and we start them off with small jobs, like $2,000 job, then a $4,000 job, then a $12,000 job, and then slowly just scale them up to where they can do like a $20,000 to $30,000 job. And do they stick to the timeline? Do they stick to the budget? Are they easy? How's their communication skills, etc.? And so we're always testing and adding new contractors. But yeah, 9 crews with us now, and then we're slowly adding more and more.
I see. And in terms of your renovations and stuff, right? Are you like at that age? I'm not sure if you have any lead paint issues in the houses. Do you encounter any of that, by the way?
Any what kind of issues?
Lead paint?
Oh, lead-based paint. So we not really, because most of the time we are repainting the entire property,
Mm-hmm.
and there's not really much chipping paint, and we try to just get rid of all chip paint and stuff like that.
Mm-hmm.
So we haven't really encountered it. We have to sign that lead-based paint disclosure, but we have never done any, lead-based paint testing or anything like that. Most of these properties, again, we go and take the paint off and repaint the entire property. Anyways.
Sure. And are you replacing any wood component as far as molding, doors, cabinets, and things like that? Do you typically replace those?
Yeah, so windows is like one of the big things that we do.
Mm-hmm.
Doors, yeah, most of the time we'll replace all the doors and the lock sets and all that kind of stuff.
Mm-hmm.
In terms of kitchens and kitchen cabinets, it really depends on the layout of the kitchen and if it's in good shape. And then if it needs to be replaced, if the kitchen cabinets needs to be replaced, then we can do that. Most of the times, I don't think we do. The things we do all the time is really like paint, flooring, and then make sure all the major systems are in good shape, landscaping, and then exterior cleanup. And because a lot of the times the exterior siding is just damaged. And so fixing the exterior siding, exterior paint, and doing things like that.
I see. And you're putting any carpets in the bedrooms or finishing hardwood floors or anything like that? How does the flooring look like?
Yeah, I would say 80% of the time it's just vinyl plank that we put in the entire property. And then, yeah, sometimes we'll put carpet in the bedrooms only. But yeah, carpet in like the living rooms and kitchen area never happens. We always put the vinyl plank.
I see. Got it. Now, moving to multifamily, Antoine, how does what sort of are you acquiring, like a huge value add projects? Give us a sense of how your apartment projects look like.
Yeah, so apartment building projects, huge value add. So renovations, like 15 grand, 20 grand a unit that we've been spending. We normally double the rents, we buy properties for rents from $400 to $500 and then turn them into $800 or $900 after when it's all done. So those are the kind of projects we do. Normally anything from like 10 to 30 units has kind of been our range that we've been doing. All in Memphis, Tennessee, and then normally all in one zip code that we've been buying these apartment buildings as well. So
I see.
Yeah.
And how is the tenant base? Is it a strong, sort of a good job population? They can afford the higher rents immediately. Give us a sense of that.
Yeah, so we like to go in and buy the properties. Normally when we buy them, they have a couple of vacancies. So those are the units we'll start off with. And then over time, just tenants naturally just leave. We don't really go and like blast a bunch of people out of the units or give a huge eviction list notice. It just takes too much time and money. Most people just leave naturally. So we'll go as units vacate, we'll renovate those units. And then, it's a different kind of class. When we go and buy that property, it's a way different kind of tenant than who's renting it out for $850 a month. So the $850 a month tenant, young professional, young couple, millennials most of the time because they want those kinds of upgrades and they want to be in that kind of neighborhood because we're in like an up and coming kind of hipster neighborhood. So they're willing to pay the premium and the rent for the nicely renovated unit and then be close to their work. Which a lot of the times they're working downtown or there's a big hospital community also in Memphis. So they're working at the hospital and stuff like that. Most of the time, it's young professionals, either a couple or somebody by themselves.
Sure. Now, how is the investor appetite for investing passively or purchasing your turnkey assets?
The investor process?
No, the appetite, meaning like, are you seeing a lot of people coming to you and buying turnkey or investing in apartments, projects of yours?
Yeah, so over the last couple of months due to COVID, it's been harder to find those kinds of people. I mean, a lot of people just lost their jobs or were worried about losing their jobs. So they didn't really want to spend their savings on buying or investing in real estate.
Sure.
I think that now that people see the end of the tunnel that, we sold like over the last weekend, like 5 properties. We had like 10 properties available. We sold half of our inventory. And then every day this week we sold one as well. So we're almost sold out, which hasn't happened for over the last couple of months. We've kind of just been stacking inventory. And then now, things have, suddenly, I think people see the end of the tunnel. And they're like, okay, I'm going to get through this. My job is fine. I'm not going to, et cetera, unless there's another spike in COVID or something like that. But, we're fine and we're in good shape. And so I think that the investor appetite is growing now as we speak. Every single day, just people are feeling more and more comfortable about it.
Awesome. Couple of last questions, Antoine. How does like sort of your short-term, like, let's say 3 to 6 months or perhaps 1 year goals look like? Are you looking to scale up big, or what does sort of near-term future look like for you?
Yeah, we had a phone call about that yesterday. I think for the turnkey business, it's very hard to scale it very quickly. You're doing 120 homes a year. Like if you want to 10x it and, go to 1,000 homes a year, like you can't just do that in, by spending more money. You can't just do that by like traveling and going and meeting new people. It's very difficult. You have to test all these teams because you're relying heavily on other people like contractors, property managers. And you can't go dump 100 properties or 1,000 properties and try to sell them turnkey. It's not going to work, especially if you want to keep your brand and your reputation around. Mm-hmm. So scale up the Martel Turnkey business slowly. And then, before the end of the year, I'd like to buy one more apartment building. If our lender opens back up, which I'm not sure if they will or not, but because a lot of these multifamily lenders who are like asset-based and not like Fannie or Freddie have shut down or slow down their lending. So that's kind of what we're working on. One more apartment building before the end of the year, and then just slowly scaling up the turnkey business.
I see. And give us some of the best advice you have received so far, whether it was your father or fellow investors and stuff like that kind of, helps you daily and stay disciplined as you kind of do deals every day. Give us some tips about that.
Yeah, I mean, one of the big things that we like to say with me and my team in Cleveland is just controlled growth. So and also like just getting used to the ebbs and flows of having your own business, and especially a real estate business where, there are seasons. For example, like in Cleveland, there is a winter, right? So in California, we don't have that, but the ebbs and flows of the business. So, and also like controlling your growth. So, if you do 100 homes 1 year, again, you can't just go and do 300 homes and expect it, not stuff to break. So controlling your growth, and then also just scaling slowly up, and then managing the ebbs and flows of the business, and just kind of riding the wave, because, you may have, there's like a funny thing that we always encounter, which is 1 month we'll have like, there'll be nobody will buy a turnkey property from us or put one under contract. And we'll be like, we need more buyers. We'll do marketing or whatever to get more buyers. Then we'll sell out, and we'll be like, oh shit. Okay, we need more properties. And we'll go and we'll find more properties. And then we'll be like, all right, we have too much inventory. We need to sell it. And every month it's like a different issue. Sure. So every month we can have the same Zoom. We can have the same podcast phone call. You'd be like, what's your biggest issue right now? Every month it's going to be a different
something different. Awesome. Thank you. I want to congratulate you on your success, Antoine.
Thank you.
At such a young age, doing such big deals, and just the expanse of doing turnkey, managing renovations, bringing in all sorts of investors, and of course now you branched out into apartment buildings as well. So and I have done thousands of renovations myself, so I can quickly relate that how busy and how capable you are. So I definitely want to appreciate and congratulate you. So Thank you for your time today. It's been a pleasure knowing you, and I hope we'll definitely reach back again in future and kind of see what other big things you are up to.
Absolutely. Thanks so much for having me. I appreciate it.
Thank you so much.
Thanks for listening to Premium Cashflow Real Estate Investing Podcast. Please join us at premiumcashflow.com to sign up for weekly updates, research articles, and more. We will see you again for another great interview with an expert guest.